Welcome back, guys, to another course. Some of you guys asked me to do a course on liquidity, right? So please watch until the end and do not skip any section of this course, right? And after watching this course, please go back to your charts and try to back test so that you train your eyes to see this kind of information, right? So if you have any question, please leave the comment in the comment section. Okay, so let's dive in, guys. So what is liquidity? So liquidity is an open interest of buyers and sellers in the market. Okay, so the concept of liquidity comes into play as a result of activities of buyers and sellers at a specific price levels. Okay, so these specific price levels can be your supply and demand zones, your support and resistance. Okay, so in simple words, liquidity can simply be defined as money in terms of stop losses. Okay, so liquidity can be seen in two forms, right? As buy side liquidity and sell side liquidity. So what to focus on when looking for buy side or sell side liquidity? Okay, number one is the previous monthly high or low, previous weekly high or low, previous day high or low, high or low of the day, old high or low, just a previous swing low or high. Okay, so types of traders or activity that you may find at a supply zone or demand zone. Okay, so these are the types of traders that you may find, or the activity that you may find at that specific zone. You'll find, in terms of supply zone, you'll find the breakout traders who are waiting for price to break out so that they can buy the bullish trend, right? You also find the pending orders traders who have already placed the buy stops just above the supply zone. And then you get the sellers who normally sell the supply zones and put their stop losses just above the supply zone. Okay, okay, before we get to real charts, guys, I just want to demonstrate to you price delivery at points of interest, the kind of models or setups that we're going to look for at previous weekly high or lows, right? So what we have here is a sell model setup. Okay, so what we have here is on this vertical line is a period separator separating the previous data and the new current data, right? So this was a last week data, and this is a new week data. So what we have here is a what is a last week high and a last week low. So above this weekly high, right, we have a buy side liquidity, and below this weekly low we have a sell side liquidity. So on this new trading week, right, when the market approaches the supply zone or the previous weekly high, right, we have this kind of nice sell setup, and there was no liquidity grab. Okay, so this is the kind of setups that you're going to look for. So this is the first one, the sell model setup, and we're gonna go to the next one. Okay, so this is the buy model setup, and you can see price delivery at this demand zone, which was the previous weekly low. So if you bought here, right, when the market got to this demand zone, which was the previous weekly low, right, it immediately went into your profit. So there was no stop loss hunt or no liquidity grab at this point. Okay, so this is the buy model setup. So let's go to the next one. Okay, so on this example, we have the sell model set up with liquidity grab. So it's still the same scenario, but now we have the liquidity grab. Okay, so the first thing, when price gets into our supply zone, right, it goes in the direction of the sellers who are selling this supply zone. It first goes into the to their direction, and then after that it goes forward for liquidity grab, and it hits the stop losses of the traders who are selling, and it also activates the pending orders in terms of buy stops, and it comes again, it induces the breakout traders. And after all this activity is done, after all this liquidity is done, which is which is the market craving the what? Craving the stop losses and activating the what? Activating the pending orders and inducing the buy stops. After the activity is done, then the market goes and hit the what? It hit the stop, both the pending orders and the breakout traders stop losses, and then it continues to the downside. Okay. So this is the another example of the buy model setup with liquidity creep. Okay, so the first thing that the market does when it gets to the demand zone or the weekly low, right? It comes, the first thing, it goes in the direction of the buyers buying this demand zone, and then after that it goes for their stop losses and it comes to grab the liquidity here below the demand zone. Okay, so the sell stops, the pending orders are all activated, and it comes to what? To induce the what? This breakout traders. And then after all this activity is done, after all this money is grabbed in terms of the liquidity, right, the market goes to what? To hit the stop losses of this of the breakout and pending orders, and then after the stop losses are hit, it continues to buy. Guys, on this example, we have the breakout sell model setup. Okay, so the market comes into this demand zone or the weekly low, right, and then it immediately buys and it goes in the direction of the buyers buying this demand zone, and then after that it goes and hit the buy the buy the stop losses of the buyers, and then it activates the sell stops, and it also comes and induce the what? The breakout traders, and it didn't go for any liquidity grab. So on this scenario, the what? The pending orders or the sell stops or the breakout traders could have won, and we have this demand to supply flip. Okay. Okay, guys, on this example, we have the breakout buy model setup. So what happens here is the market comes into our what? Into our supply zone, which is the weekly high, right? So we know we have the what? The sellers at this supply zone, right? So the market goes in the direction of the traders who are selling this supply zone, and immediately it rallies up to what? To hit their stop losses. So it also activate the pending orders, and it comes and activate as well the breakout traders, and it immediately what? It rallies up without any liquidity grab or without hitting the stop losses of buyers. Okay, so we have as well here the supply to demand flip, right? So the market comes to test this supply as a demand zone, and it rallies to the upside. Okay, guys, on this example, we have the breakout buy model setup with liquidity creep. Okay, so on this example, what we have here is on this supply zone, we had the sellers who were selling this supply zone, their stop loss is hit, and we also had the what? The pending orders and the breakout traders who were buying this supply to demand flip, and you can see their stop loss were hit in terms of this liquidity grab to a fair value gap and the order block below this new demand zone. And then after that, the market continued to rally up. This is the last theoretical example before we get into real chart. So we have the breakout sell model set up with liquidity grab. Okay, so what we have here is the market comes into our demand zone. So we know at this demand zone, which is the what? The weekly low, the previous weekly low, right? We have the buyers, right? They buy in this demand zone, and immediately the market comes and hit their stop losses. It also activates the sell stops and the breakout traders, and then immediately after that it goes and hit the stop losses of breakout or the sellers who are selling this demand as a new supply flip. Okay, and then it goes above and hit the stop losses in terms of the liquidity grab on this fair value gap, and then it continue to rally down. Okay. Okay guys, now we've reached the practical application where we're going to demonstrate with real data, right? I hope you guys took some notes on the theory concept modules that we've covered. Okay, so the indicator that we're going to use for this section is FXN, week and day separator. Okay, make sure you click on it and make sure that your time frame is 1 hour, right? So what we have, these vertical lines, they are our period separators. Okay, they are separating the current week from the previous week, right? So if we are trading this week, we're going to be trading this week, is you mark your high and low of the previous week. Okay, so this was the high point or the highest high of the previous week, right? And we had this resistance over there. Okay, let me just remove everything. So this was the high of the previous week. Okay, and you track it. This was the weekly high buy side liquidity, and this was the resistance, and this was the weekly low sell side liquidity, and this was the support. Okay, so on Monday, what happens? The market trade throughout the buy side, the weekly buy side liquidity. They grab the liquidity just above it, and then they come and test it as a what? As a resistance, and continue to the downside. Okay, and now going into the new week, if you are trading this week, you remove all the markings. Now you throw your previous weekly highs and lows. This was my previous high, and this was the resistance, and this was my previous low. This was the demand zone or the support zone. Okay, so on Monday they come and trade for it, break out and retest, took out this low, and then they grab the liquidity just above here in terms of the fair value gap. This was the fair value gap, and then they come to take out this old low. Okay, and they trade for it. So now coming into the new week, we remove the markings of the previous week, and this was the high of the previous week, and you track it towards this new current week. Okay, this was the weekly buy side liquidity, and this was the weekly sell side liquidity. So on Monday, when the market opened, they came to retest this, failed to break through out it, and on Tuesday they break through out it and test this resistance as a support, and then continue to go to the upside, right? So now going into the new week, we remove the markings. This was the low. Oh yeah, we are on this week. This was the high of this week, and we had some resistance over there, and the lowest point of the previous week was there, and we had support over there, right? So when the market opened on Monday, they come retested this resistance and then continue to what? To grab the liquidity below the previous weekly low, right? They grab the liquidity in terms of the order block, there was an order block just there, and then they continue to the upside, and then they come to test this previous weekly as a what? As a support before they move up. Coming into the new week, new setups, right? And this was the high. Let me just weekly high buy side liquidity, and this was the resistance, and this was the low, weekly low side. So on Monday they come, on Tuesday they come to retest the weekly resistance. They come to grab this buy side and sell side liquidity before they break through it, right? So we had that weekly high there that was never traded through. We had this weekly buy side liquidity that was never grabbed. So they come and test this weekly resistance as a new support and continue to the upside. Okay. On this current week, we had the previous weekly high there, and this was the weekly low. Okay. So this is GBP USD, and you still have this buy side and sell side inefficiency. So the market might come to grab this buy side and sell side efficiency before they can come to take out this old high. So we have this daily high buy side liquidity, right? So the market might come down to this buy side liquidity. Okay, so let's move to another pair. Let's see USD CAT. USD CAT, we're gonna be trading this week, right? So we mark up the previous weekly highs and low. So this was the high of the previous week. You track it throughout time. This was the zone, which was the resistant or the supply zone, and we had a fair value gap here. We had a fair value gap. So the market comes and trade into this supply and then grab the liquidity above and then decide to sell. Okay, and we have the lowest point over there. They come to grab the what? They come to grab the liquidity below the sell side, the previous weekly sell side. Okay, so now coming into the new week, we remove everything. This was the high of the previous week, and the lowest low where the market closed last week was this point. Okay, and we had this fair value gap there. So the market comes, grab the liquidity in terms of the fair value gap, and then continue to the downside. All right, fair value gap and then continue to the downside to grab the liquidity below this old low. Okay, so now we remove the markings going into the next trading window. We have this buy side liquidity over there. Our lowest low was at this point. and it also came with the rejection block. This was the weekly low, the previous weekly low. The market came, it gave us this wick or the rejection, and we might see it trading towards this fair value gap or sell side, buy side inefficiency. Before they do that, there is still fair value gap over there that they can come and grab. They can come and balance this imbalance and then continue to the upside. This is USD CAD. Okay, so guys, this is the end of the video. I'll see you in the next one.